evening, all. Ira Epstein, and here we are on CPI Day, and this is September 13th, Tuesday, 2022, about 5:13 p.m. Central Time. You know, I want to go into something with you before we talk all this. There's two ways that people approach, be it the futures, stocks, ETFs, whatever it is. Some people are investors. In futures, most people are traders. If you're a trader in futures, how could you not set rules up for yourself like you heard me say? How often did you hear me say over the past week? I have no intent of going through that CPI report. It's almost like standing on a train track waiting for a bullet train to come down the road and you're going to jump out of the way right in time. You can't jump out of the way. I know it. I've been around it. I like to call myself the Swiss cheese guy. Why? Because there should be holes through my whole body of everything I've done wrong in different parts of my career in the markets. And one of the things that I learned, and you should learn, is the markets, not me, the market's going to tell you what is a big report that's coming up. As an example, I don't think the FOMC report coming out on the 21st is any longer a big report. Why? Because the market did the Fed's job for it today, and it gave it the data to get a 75 basis point hike. The 50 should be off the table. I think the market's fully pricing in tonight 75. There'll be an argument, should the Fed go 100? I don't think that the Fed has to do that for one reason. You don't have to set a scary number out there. Some people will say, why not just go big and get ahead of this inflation? You're not doing it. That's got about 20% chance tonight on the Fed funds of the 100%. But it's an 80-20 bet, so I view that. Does that mean I want to go through the report if I don't have to? I don't know. I'll judge it then. But I've downgraded the report from a big report in my mind to just another report. The CPI was big because the market has been betting all the way long on the stock market rally that the Fed is going to blink, the Fed doesn't have the courage, inflation on its own is falling. Well, let me give you a secret. Inflation's not falling. Inflation hasn't begun to fall. It will. There is a time element between raising interest rates, it grabbing hold in the economy, slowing demand down, which in turn slows down inflation. That's what the Fed is doing. It keeps raising rates and it's looking over its shoulder to say, when is that going to grab? It's almost like taking a large oil tanker. If you've ever seen one in person, your jaw drops. They're that big. We're talking football fields. I mean, these things are monstrous in their size. Or tankers that bring in all these trailer loads of things. If you see them in person, you wonder, how do they dock them? Well, they don't dock them at the last minute. It's not like driving your pleasure boat. Miles away, they begin slowing down and getting the whole procedure down to where they're going to be. Well, it takes time. It takes time on interest rates. It's got to work through. It's got to curtail demand in different ways. It's got to make the price of goods go up to the point where people start saying, you know, I'm not going to grab that cup of coffee in that store. I'm going to get it at McDonald's or somewhere else that's cheaper. Yeah, I know it's not as good, but I don't want to spend $2 on a cup of coffee with you when I can get one for $1 down the street. Those are the things that start happening. And I've given you a small example. There's bigger ones that will happen through that. And as that happens, then we get it. So, do I think this will bite before the end of the year? I do. Do I think it'll be dramatic? I do not. I think we have a sticky inflation. Your rent's not going to go down. Today I was looking at the price of insurance. I didn't know until I saw the report, and I was right on the money. I said, that's not going down. How do I know? I have yet to see my insurance companies write me a beautiful letter and tell me my premiums are going down. They're always the cost of doing it, and this is why it's up. Cable bills, they don't seem to go down, although Paramount is working on trying to bring in now Showtime with its Paramount and trying to create a bundle that will somehow make you think you're getting a better deal. I don't know. Okay, here's the S&P. In essence, you're back in with downside momentum. You had a fling on a weekly basis of getting over that number. With today's 3% break, you're back under. It's only Tuesday. Actually, it's Wednesday. We're open already tonight. So this is where you're at. But what did I tell you happens? It's not uncommon for markets that are under this number to come back and fight at the 18-week average of close, and from there decide what's the next move. Daily charts, weekly, they all work the same way. Look at this monster break you had today in the S&P. You still have the pattern of a lower low, higher high. There's no trend trade that I see there. The market got up, and prior to today, we can take a look at this and just see what it was doing. This is how you look. You had a settlement over the 18-day average, and that's the zone I think the market's going to fight. You hear me tell it to you all the time. So you got up and you fought between the 100 and that number. You beat it. On the way down, if it weren't a big report day, I would be expecting support between the 18 and the 100, but it is a big report day. So anything can happen. And what happened is the market started off last night with the bulls very confident that things are just going to get better and better for them. I think that they were trying to eye the 200-day moving average of closes. Well, they got a collapse on their hand. They have a huge outside day to the downside. And now the Bollinger Band has had a chance to get under that 200-day, and it's going to chase prices. So if you get a good rally, that'll be your main resistance number if you clear again this combination. Now, let me give you a bearish setup that is setting itself in place now. The 18-day is making a run at the 100. So let's assume it gets under it. Then you'd have the shortest term average, the 18 under the 100 under the 200, you have a complete bear setup again. So you always think ahead what you might have there. Do I have a signal here in any manner as a chartist to do anything? None. Where do I think the market may eventually challenge? I still haven't changed my mind. However, what number did we get down to? We're challenging that all-important 3,900 range that so many people talked about. So this is your second test of it. It might be successful in the sense you don't really take much out there. We wait, we see what it's going to do. In terms of momentum, I don't lose sight of this. You're oversold. Oversold conditions, if you use that in your framework of trade, it's one of the things that says, hey, you don't do anything. Oversold can become embedded bearish, but it's not. It's just oversold right now. I don't see the pros doing anything except this, licking their wounds, going, what the heck happened? I could have been out of that market before this report. What was I thinking? I was in that camp so many years. I don't do that anymore. Lower low, higher high. You went right up just like the others. Here's your resistance point. Now we have to see, are you going to get a bearish crossover? It can happen here too. In the Dow, are you going to get your bearish crossover? You just got it as we're talking. The 18 just got under the 100. So if that's the case, the most recent low you look at right over here, and that's a likely target if that occurs, all right? What would throw this off? Taking out today's high. So you have a spot on your chart that the game changes if for some reason today's high is suddenly taken out. Could be a week, could be whatever. The game changes. But barring that, you have your resistance points set in place, and now I'm starting to look, how do I get short these markets for more action? I certainly don't want to sell this break oversold, but given a rally, what am I going to look at? So the game plan starts forming. In the Russell, there is nothing here. You have a market with a lower low, a higher high. You ended a downtrend that we pointed out on every chart that we had done, lower highs, lower lows, that ended when you got up right in this area. Took out that high. Went to the 18-day average, can't deny that, the line in the sand, and has failed from there. So I'm looking for setups to get bearish. I don't have them. I have no reason to be long because I'm not over the 18-day average of closes, and that would set the bias up. Does that make sense to anybody? I hope it does. We then get to our friend the VIX, which was up today a whopping 15 and some odd percent at one point. I think it finished 14.24 higher. But it's knocking on the door of resistance again. the Bollinger Band. It only stays over at 5% of the time. So I realized that the monster break also created a situation here where the market's up to a big resistance point. So tomorrow would not surprise me where it's going to be after the PPI. I'm so glad that's over. I got to lick my wounds. What do I do next in the market? Where do I do it? That is the mentality that's going to go on, because the bulls had control of the market going into today. In the 30-year bond, you've had an embedded reading. The bears maintain control. Rallies will get sold, in my opinion, until the red line closes over 21 with objectives that each time you hit the Bollinger Band, whatever they put out, they'll cover portions of it on the way down. But I don't think traders will go through the FOMC meeting with this. Why? Got nothing to gain. In the 10-year notes, what number did you go down to? Where's the cover zone? You began here, then you're getting it. I don't know that anybody should have been in this today, to that Bollinger Band, but it went there. Do you see any reason to have been anything but bearish coming into today? And I'm giving you all the reasons that I would not have, okay? Not that I wouldn't be bearish, no position. Been there, done it, and done it all wrong. Now I'm in the driver's seat mentally. I'll have losing trades, I know that. I don't have to get wiped out. You get wiped out on a day like today. In the dollar index, we were coming down to the Bollinger Band. You hit it last night. That's different, okay? Last night, not after the report. So last night before the CPI, I think the pros took all their money off the table. All their money off the table. Why go through the report? You're caught between the upper band, the lower band. Learn this. This is so simple to work within these bands in momentum. And yes, my slow stochastic readings are going to be different than yours. We'll tell you how to modify yours so that they exactly match what mine are doing. And then you'll learn the concept of this. You're going to get times where you come out of a market and you'll say, it kept going. So what? There's ways to get back in if it embeds. You had them. And then when it loses it, your way to come out. There's always, always, always another plane, another train, another bus. They're coming there. The opportunities don't stop. What stops is it won't matter what the opportunity is if you break your account. In the eurocurrency, you got up to the upper Bollinger Band, first time, not embedded, 2 days ago. Why would anybody hang in? It's my mentality. I get it. Because I understand these Bollinger Bands. That's where I'll be teaching to come out. This is where the first spot to come out of shorts. You had opportunities to go short again. You embedded. And then when it lost it, you got to come out. Maybe they don't make you money. But you're with the momentum and you're with the trend of the market when this occurs. In the British pound, this is still very bearish. All you did is rally to the 18-day average. You haven't taken out a previous high. But you're so oversold. Either embed or correct. Do one of the two. Don't stay oversold. Makes the market too difficult to trade. Bitcoin. Well, if the stock market drops, this drops. Where did it go, though? You don't think it challenged the upper Bollinger Band? I think it did. If we come back, let's go back into today so you get an idea. How close did it get? It didn't hit it. You got to a high of $22,875. So you were $100 away in round figures from hitting it. If you had window envelopes on it, you saw the other issue. You would hit those. Window envelopes complement Bollinger Bands. Now we get to the energy. And here's the important thing to understand. OPEC Plus thinks that the market is schizophrenic and doesn't understand that the demand is there, recession or not, for all the oil that can be produced. Number two, the market doesn't think the American public or the marketplace understands that this strategic reserve oil that we and others have released is coming to an end. And if anything, those that release the oil will now start buying oil to replenish. That will add to demand. Number three, where's additional production coming from? It's not there. Number four, oil is still cheaper in many parts of the world than natural gas. So the Saudis are saying, no, the market's schizophrenic. I think what they probably have to do is get a better sense of timing. That's probably where they're off. Do I think they're right in the end? I do. Do I think the world will go into a recession? Yes. Do I think it's going to be a deep one? No. Their own figures today, they agree with that. They're the ones who got all their top economists. These people don't have a few guys writing a report. You do understand this. This is a billions upon billion, trillion-dollar empire that's there between all these countries. So therefore, they have the best of the best. They see it. It's timing. That's where I think that they're mistaken. When we look at it, the market keeps challenging the 18-day average of closes. When you close over that, number one, you'll break this pattern. You won't have the pattern of lower highs, lower lows. When you break it, you start flipping the momentum back up. That's when I'll start getting interested on the long side. Right now, the market's more enamored with the thought, and they have to understand that inflation, central bank, raise rate, slow economies down, hurt demand on everything. That's the first phase. Same thing is happening in WTI crude. This is your battleground. It'll flip. Once the U.S. doesn't put out 1 million barrels a day out of its strategic reserve, which is going to happen, I think, in the next 30 days, they already have said that under $80 a barrel, the first idea came out of the White House today, maybe that's where they start buying oil. So we're going to buy oil. The rest of the world's got to buy oil. You're going to put a floor under the market. I think the White House just told you the floor is about $80. They don't realize they say these things because they're all idiots there. But that's what I think is going on. In gasoline, I think that you have a market with lower highs, lower lows, and I'm looking for the part here of 253.63. And by the way, when I said all idiots, the staff that supports President Biden should all be fired. To the person. They would be better off with college kids in there than these people that think they know what they're doing. So I look at all that's going on. Lost your momentum. I said I thought gasoline down here. We had talked about it a week ago. Look at the videos. I said I think we're in the phase where we're making that gasoline bottom. I haven't changed my opinion. Last, nat gas, same thing. I think that we're at that point that the 100-day average is proving with the Bollinger Band a lot of strength. So you keep hearing me talk these Bollinger Bands. What is going on? Well, you see so often. You get up to the top, then you swing back often. Not always to the bottom band, but certainly to the 18-day average. How do you play it? What do you do with it? Why is it so popular? I have it on my charting service. If you got a charting service, you have it. I'd be shocked you don't have it. What do I do with it? Learn. Put this together for you. 13 videos. Quick. It's not meant to be a course that takes you a month to go through. It's quick. You learn the basics. You apply them. It shows you the buy side, the sell side, the neutral side. It's pretty darn simple. And then you follow the discipline and you ingrain it into yourself, and all of a sudden you got another game plan. You have another tool in your arsenal. Take a look at this. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.